Hello guys, welcome to this video. And in this video, we're going to be talking on lot size and the right lot size to use when trading with a small equity or capital. And we're going to be discussing what is lot size, how to set your lot size on your MetaTrader app, the right lot size to use as a small equity trader, and then the SL size to also use as a small equity trader. So we're going to start with the very first topic we have here, which is what is lot size. So what is lot size? In Forex, lot size refers to the quantity of a commodity that is bought or sold by a Forex trader. So let's say that as a currency pair trader, we are going to be referring to the commodity that we are buying or selling as currency pair. So with this in mind, let's simplify this example using a real life example. Alright guys, so we're going to be using an example to explain this. So let's say you walk into a supermarket and then you want to buy flour. That's the one they used to make cake. The supermarket attendant is likely to ask you how much quantity you want to buy. You understand? So when they ask you this question now, you tell them how much quantity you want to buy. So I'm going to use an example here to explain to you what lot size is in forex trading. You understand? So now listen carefully. So let's say now that you go to the supermarket and then they ask you how much quantity of flour you want. Now say you want 5 gram, right? The same thing applies, 5 gram of flour, and this is the supermarket. The same thing applies in forex. You want to buy a currency pair now. You have to tell your broker how much quantity you want. And then instead of in gram now, it is now in lot size, what we call lots. So it's now be, let's say 0.0 0 point, sorry, let me erase this and write it properly. So you see 0.01 lots is what you want to buy. This is what, this is floor, then this is euro USD currency pair. Let's just call this euro USD, and then this is the forex market, right? So you see what I'm saying here now. So this stands for quantity. This also stands for quantity. This is the commodity we are buying in the supermarket. This is the commodity we are buying in the forex market. This supermarket and this forex market. So you see that lot size has to do with how much quantity of a particular currency pair or commodity that you want to buy or sell. Okay, it's that simple. That's what lot size is. Now we now have 3 standard units of lot size. So I will now show you. I'll now explain the standard unit of lot size. So we have the standard unit, as you can see here, which is 1. The standard unit is 1. We have the mini lot size, which is 0.1, and then we now have the micro, which is 0.01. So these are the standard. So by standard, what we mean is that you can actually still buy or sell a particular commodity using 0.03. You can buy 0.03 quantity of that commodity. You can buy 0.05 quantity. You can buy 0.2. You can buy 3. You understand? But this just stands for the what? The standard. So let's now move over to like another part of this lot size I want you to understand. All right. So let's say now, as in supermarket, we say 1 5 gram of this, and then of the flour now, and then here we now say one lot size of a currency pair. So if 1 gram of this is 1,000 naira, it means that 5 gram will be how much? Will be 5,000 naira, right? And then one lot size, if you trade one lot size, we need like an account of $500. This is an instance. Account of $500 to trade one, to buy or sell a currency pair of one lot size now. You understand? If what we have in our pocket, or let's say in our account, is $300, you've seen that we don't have up to this $500, therefore we can't buy this. We'll now go for a lower lot size. If what we have in our pocket says 4,000, you see we can't buy this, therefore we'll go for a lower floor. So this just show you that the amount of money you have, that means the quantity of a particular commodity or currency pair that you want to buy. or sell from the what in the market. So with all that being said, we are now going to move on to the next thing, which is how to what set your lot size. All right, let's move on to that. Okay, so now we are on my MT4 interface. So this way I'll be showing you how to change your lot size or how to set your lot size. So basically you can see this part. This is where you're going to be setting your lot size. This middle part, to be precise, that's where you're going to be setting your lot size. So if you want to change your lot size, just simply tap on it, then you input digits you want. If you want to put 0.02, you can put 0.2, 0.3, 0.5. You can even put 5, you can put 10, you can put 0.03, whatever you want to put. So that's simply how to set your your what they call it, your lot size on your MT4. This is for an iPhone interface. If you're using an Android, it's not difficult. You can still find it and set your lot size by yourself. Okay, so let's move on to the next thing. All right, so guys, we are on to the next topic now. That is the right lot size to use as a small equity trader. If you are a forex trader just like myself that trades using a not so big capital, capitals that range from $100 to $5,000, then you should use the following lot size according to your capital for proper management of risks. So as you can see here, we have 100 from for people that are trading $100, $200 accounts, you use 0.01, $300, $400 account, 0.02, $500, $600 account, 0.03, and so on. It just goes like this. This is a lot size you can use towards follow a proper risk management plan. So as much as using a reasonable lot size is important in proper risk management, your SL size is also important. So let's talk more of this. Let's talk more on this particular one. Let me show you guys the reason why I said that your SL size is also as important as your lot sizing. Okay, so let's go over to my whiteboard about the SL size and then the lot size and everything. So as I told you, as much as you need to always use appropriate lot size, it's important to also have a good stop loss size. SL means stop loss. So by when I say SL, just know I'm talking about stop loss. So using the image here, you can see that what we have here is gold, and it says sell now at the first range of the selling. That is, so you see the first range, say if you sell now at 1933, we use just this one, leave the second range, then our take profit, the final take profit at 1923. That is the second one that you can see here. Then our SL size is at 1938. The rate told us that is minus 50 pips. So with this being here and everything, so we have to now know, okay, let's just erase this. So I can now, let's now place a trade. Let's place a trade. So assuming now we place a trade here, that's the gold. Now we sell the gold and we sell it with 0.01, and we're using $100 account, right? $100 account. So when we sell it now, when we sell this at 1933 and it goes down and gets to 1923, what we made here is 100 pips. 100 pips. And what we risked was what? We risked 50 pips to make 100 pips, which is very okay. This is very okay, because if your lot size is too close, before maybe the trade wants to express itself properly, it might hit your stop loss. So you give your stop loss a little space so that your trade, let's just use the word breathe, so your trade can breathe, then put the trade back to your desired direction. So this 50 pips is good, you see. So if, let's say, if you're to make money from this trade now with this 0.01, you'll be making $10 from this. If you're to lose money from it, you'll be losing $5. So you see, you're risking $5 to make $10, which is very okay. You see, it is very okay. But then there's some people, this for 0.01, because what I'm teaching now is how lot sizing for people that are using small trading small accounts. But then, for instance, look at this next signal. This is a random signal I saw. Okay, so basically look at this stuff. I just saw this thing online or somewhere where someone posted it, so I said to use it to explain this. So you see, this is Euro USD buy, and they said they should buy at 1.0890, and the final take profits as 1.0990. Then the SL is at 1.0790. Okay. Oh, okay, sorry, 760. So now look at this. Let's say you're using a let's say you're using a 0.01 again on $100 account. Now you place this trade. What you want to gain, let's say when you place this trade now, what you want to gain from this trade, what you have to gain if this trade is to go in the other direction, you have to gain at least, sorry, you have to gain like 110 pips if this trade goes in your desired direction, right? But if it goes against you, let's say it hits stop loss, you're going to be losing by 130 pips. So it's just like saying you're risking $13 to get $10, which is very, very poor. And if this kind of thing is this kind of should I call this this kind of setup is used on $100 account, and you're hitting your stop loss most times, this account can easily get blown off. So this kind of trade, this trade is not, it's not like risking too much to gain little. No. So don't use this kind of signal, okay? Always check your SL size. So now there's another thing I will show you guys here. So as you can see, bringing back this gold signal here, as you can see, the first tip you have is at 1928, sorry. Then the second one had 1923. So at this place, what you've grabbed here is 50 pips. Then at this place, you've grabbed 100 pips. I'm saying if you sold it at 1933. Now, when you grab this 50 pips, something we call break even. We call it BE for short, but it's called break even. Once you grab this 50 pips, you can set what this thing we call break even. When you set it, your trade is no longer on any risks at all. So it's either you make money or you don't make money at all. I'm going to make another video explaining how to set your break even and what break even has to do with, as has to do in the market. Okay, so you just simply maybe subscribe to this channel and then just get ready, because that video will be coming up next. So that's it for this. When you set a break even here, so you cannot lose money again. You either make money or you don't lose money again. So that's that. That's for the SL sizing. Then I want to also explain what we call layering, but I'll do that in a different video. You get, I'll be dropping a lot of content on these things, strategies that you can use to reduce your risks in the market as a forex trader. Okay guys, so this is the end of the video. If you have any question, leave it in the comment section, and if you have like any topic you want me to discuss and simplify on forex, also leave it in the forex section. Okay, I'll be checking that out and I'll be replying to all your comments. All right, don't forget to like, and then you can also subscribe to the channel, because we're going to be bringing out and giving you guys more content on forex trading to make your forex trading journey super easy. So you can actually join the my free Telegram channel. The link is in the description box. You can follow me on Facebook as Stephanie Feinwa, and then you can join the SFD Forex Training Academy. Link is also in our description box, and then you can trade with me. Link is in the description box. Okay, see you guys in the next video.